What's going on, traders? Welcome to another trade breakdown video. And this one, I'm going to break down two of my trades, one on the NQ and on the ES post CPI. So starting with our daily chart, first we have to identify our daily buys. We tapped into this fair value gap on the daily chart. And if we read the Fed price delivery and institutional order flow, so we are in a downtrend, up close candles followed by closure below. Watching the order flow is bearish. Now adding the Fed price delivery, we had expansion of 3 days. Now the next phase we want to expect is a retracement. So the price retraced into this fair value gap on the daily chart. On the ES, it also tapped into the same fair value gap. So now we have a narrative that the price retraced towards the internal range liquidity, and now the next target is the external range liquidity, which is this low and this low right here. The CPI was released and we had the narrative for the price action. Now the next step we got to do is drop down to the 4-hour chart. So on the 4-hour chart, you can see we tapped into that daily fair value gap, and on the ES, you can see we had a large wick size, which means a rejection and weakness in the price section. We took this high on the NQ and same high on the ES chart. Now we have the narrative, and if we align the 4-hour profile, so the 6M is going to be a reversal candle. So we can trade the 10 AM as an open, high, low close, or bearish expansion candle. Now there isn't any SMT divergence to trade off of, so we will drop down to the 1-hour chart and using the narrative of my model, which is that there will be 4 expansion candle in the next 4-hour candle. So keeping that in mind, I will drop down to the 1-hour chart. So here on the hourly chart, you can see we had a bearish SMT divergence on the ES, which means the ES is a weaker pair and the NQ is stronger. We have all of our confluences, a daily fair value gap as an internal range liquidity, SMT divergence at the hourly swing point. Now all we have to do is wait for the 10M expansion candle. In this case, the 9M didn't provide any relevant entry, so I waited for the 10M. So skipping to the 10M, now skipping the 9M candle, the indices open, we have more structure. We have a change instead of delivery on the 1-hour chart, which is telling us that the order flow is now shifting bearish. On the ES, we had the change instead of delivery earlier because it was a weaker pair. In hourly SMT divergence, daily fair value gives the point of interest, and we have the 4-hour candle on our side. The 6M is a reversal candle. You can see it from this wick size, it into two closure. Now the 10M candle will be an open high, low close candle. So keeping that in mind, I will drop down to the 5-minute chart. Now on the 5-minute chart, we have change instead of delivery on the ES. We have a series of up close candles which took the buy side liquidity and have SMT divergence, and the closure below it is defining that change in the state of delivery, that shift and the order flow. Now this is our first confluence that the order flow is now shifting, and on the other side we have SMT divergence at this high on the ES chart. So relative to the ES, we can also assume that the change in the state of delivery has already occurred on the NQ because the ES is already dropping to the downside. Now all we have to do is wait for the 10 AM open high low close candle and position ourselves within that. Now you can see that the new 10 AM candle open up. Then we want that small wick of the candle, the up close candle, then followed by a closure below to define our continuation order block and entry on that order block and target 2 or 2.5R. So with the next candle, we got continuation order block signature, close candle followed by closure below, and also a new 10 AM open high low close candle. Now both on the chart we have the continuation order block signature. So I enter on the next candle my stop loss above this high, and I aimed for 2.5R, and I took a parallel entry on the NQ because they were both dropping to the downside and NQ had a better structure. I put my stop loss above the 50% of this continuation order block to get a good RR, and I aimed for 2R. Now letting the price action play. The price expanded and hit our profit target. So this was the trade breakdown of the two trades I took post CPI. There is always opportunity after the CPI. You don't have to gamble and risk your capital. At the news, I always wait for the high probability setups. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and execution will be shown on the right side of the chart. And see you in the next one.